Hello traders, my name is Logan Silver with Funding Talent. In today's video, we're going to be doing a live market forecast for you guys, and we are going to highlight the main fundamental drivers for you to keep your eye on in this upcoming week, and the best technical setups for you to capitalize on when you see them. So, without any further delay, let's head right into the video. Okay traders, so here we are on the slideshow, and as always, we're going to dive first into our news events for this week. So for this week, we're going to be starting off with Fed Chair Powell speaking at 9 a.m. EST for the US dollar, as well as some news on Tuesday, 10 a.m., as well for the US dollar. And then on Wednesday, we have some early morning news for the euro, as well as for the dollar later in the morning. So we have 4:15 and 4:30 euro news, and then 10 a.m. euro news. Thursday, you're going to keep your eye out on the Swiss franc at 4:30 a.m. for the SNB monetary policy assessment, as well as the Canadian dollar and the Great British Pound, both at 5:30 a.m. when the Bank of England Governor Bailey will speak and the Bank of Canada Governor will speak. Don't want to mispronounce his name. And then for Friday, we are going to have our Euro Summit, which is pretty exciting. Hopefully we find out some very exciting news there, hear about what's going on in the Eurozone. Pretty much the only day for you to really keep your eye out is going to be Wednesday morning. So for our scalpers and intraday traders, be sure to lock your stops and tighten up your trading around those times, just to play it safe in case unexpected volatility hits the markets. So, the economy shrank by 3.5% in 2020. That is the largest single-year decline since the end of World War II. Weekly unemployment figures remain historically high, with approximately 712,000 people initially applying for unemployment assurance just in the first week of March this month. And for reference, a typical pre-pandemic week saw about 250,000 new unemployment applications. So that is almost 3 times the size. Approximately 20 million people were receiving unemployment benefits of one kind or another as of late February, so just last month. That is about 1 out of every 9 workers. So at your work, 1 out of every 9 of you was receiving some kind of unemployment benefit. The reason I bring this up, of course, is because everybody's beloved stimulus checks were hitting this week, and they are starting to hit just as of the last couple of days. They will continue to go in. I'm pretty sure they're not reaching everybody's bank accounts yet, but will continue to over the next week or so. The hope for this stimulus package is to promote consumeristic and investment spending, to prop up failing businesses, and actually the entire economy. A lot of Americans are hurting, and the stimulus check is their light at the end of the tunnel. We will see if it will perform to expectations, and critics contend that the stimulus added $1 trillion to our deficit and simply shifted economic activity that would have happened anyway. A study that pointed to unemployment rates, which rose even after the stimulus was implemented, was acting as proof that stimulus checks were ineffective during the 2008 financial crisis, so I personally am very intrigued to see if they are effective as of this pandemic. So for this week, we're going to be looking at a risk on market sentiment just because all of this great news. I do think that this will not maintain for a very long time, but just for this week, my eyes will be on risk on. So, steady increases again across the board when it comes to vaccines. We have 151 million delivered now, which is a 20 million change from last week. And we have 115 million administered, which is fantastic. We've reached over 100 million administered, which was, I know, the Biden administration's first target. That is a 18 million change since last week, and he is supposedly supposed to announce a new target as of this week. So as I said, risk on market sentiment for now. Expectations are higher for further economic growth for our newer viewers who have not gotten into a chance to learn about our risk on versus risk off market sentiment. And again, that means that the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound are set to appreciate if the market goes according to a risk on market sentiment. So moving into our Dxy chart for this week, as you can see, we finished our ABC waves, and we are forming another complex correction right here, which seems to just be a flat correction, actually. So we will see what happens in the next couple of days. I do not have a set direction on the dollar, which you will see in our currency basket analysis in the later part of this video. But if this breaks for a leg higher, an impulse move higher, then my bias will be shifting to long, because that would be our first wave in our 5-wave advance after our correction. Makes complete sense if you're an Elliotian, and just if you're trading off of market cycles. So we're going to wait and see what happens for this next wave in DXY. For BTC USD, I was actually missing out on a long opportunity right now, but my what I'm looking for essentially is a three-wave move down, which it seems like we are actually getting right here. We had our A wave, then we are completing our B wave now. So if this continues to break higher, this will be invalidated. But as of right now, we are going to be looking for one wave lower, possibly to the $56,000 to $55,000 range before we start our next wave higher. And this is the wave that I've been talking about for quite a bit of time, which could take us to that $68,000 price range over a little bit of time, of course. So for our Smp analysis, you guys are probably thinking, Logan, you gave us this analysis all the way back here in February of the 12th of February. As I said last week, it is not yet invalidated, and you can see right here that we actually bounced off of this level on the 4-hour chart. And that is also a retest and confirmation of this support line right here. So we're going to see what it does here. If it comes back and breaks up higher, then this will be invalidated, but it will actually just come into my alternate account. So my alternate count is the 5th wave ending here at the 44,070 level. If we then hit that level, I will then shift my bias again short. But in order for my bias to shift long in the short term, we will need to break and close on the daily chart above this 3,967 level. Until that happens, this just looks like a confirmation of our divergence, the support line, and our top that we set previously. And that means we'd be confirming our bearish bias for the short to medium term. For our silver charts, I also gave you guys this analysis, I believe, last week. As you can see, we've not yet invalidated this, and we actually are confirming this support line as resistance now. So if you want to drop down to a lower time frame, it looks like we are just accumulating on this resistance line, forming a little bit of a channel right here. And I'm going to see, for my short bias to remain intact, that we break out of this support line and not break higher, breaking into this resistance. If we do, I'll then look again for a retest to that $28 level. But until that happens, as I said, my bias will be remaining short. And I've also been preaching this analysis for the last couple of weeks. As you can see, our gold analysis is performing very well. If you got in on our buy signal right around here, you'd be up about 5% right now, which is a good size move, but obviously there is plenty more room to go. So for Ethereum, this is an interesting chart because I am definitely fundamentally bullish on Ethereum, especially with EIP 1559 coming out. But until that happens, I am seeing some technical setups that will lead us to having a short bias, which, as you can see, we broke out of this uptrending channel, finishing our B wave, which means we'd come down to complete our C wave. We are also divergent on the top, and we are forming a head and shoulders. That's 3 confluences for me to say I am confident right now that Ethereum will be short biased. Moving on to GBP USD, this is just a update on our analysis that we gave out 2 weeks ago. I said around this level that we were going to come back down to this 1.365 level, which we are definitely heading to now, forming a little bit of a channel on the 4-hour. And I will look for continued bearish momentum to take us down to the level before looking for potential long opportunities. For AUD NZD, as you can see, we have an A, B, C wave here. We're looking to start our C wave soon once we break out of this triangle. The break of this triangle will be the confirmation for this trade. As you can see, we are divergent on the top, retesting a retesting a resistance fractal, and we are giving a rejection from that level now. So my bias will remain short on AUD NZD, and the confirmation again will be once we break that support line. As you can see on AUD USD, I'm also short biased. Looks like we have a 1, 2, 3, 4, 5 wave here, and then we have an A right here, B, C, confirming our head and shoulders, as you can see right here. Left shoulder, head, right shoulder. So my bias is also going to remain short on the Australian dollar, United States dollar. This is Euro AUD, which I'm actually bullish on Euro AUD because, as you can see, we had a double bottom here. This is a lot easier to see on the 4-hour chart, as you will see here. Came up, bounced off that level, clear divergence. We're at the same level here, yet the indicator is in complete disagreement with that. So, as you can see here, we're also completely showing lack of momentum from our sellers. Sellers are fizzling out right here, as you can see by these very small candles. There's not a lot of strength in these candles, not a lot of movement in either direction, but they are closing bearish, which signals to me that sellers are losing momentum, which is a great confluence for our double bottom long opportunity that we are presented here on Euro Australian dollar. Moving on to Euro Swiss franc, we actually completed a 1, 2, 3, 4, 5 wave here, an A, B, C, again with another head and shoulders this week. Left shoulder, head, right shoulder. If you took this trade, you'd actually have an opportunity to add a little bit more right here. We're coming up with a potential selling opportunity on the 4 hour right here on the break of that. So I will definitely be keeping my eye on this and keeping my bias short for Euro Swiss franc. Moving into Eurogbp, I gave this analysis for you guys last week. This was actually a trade I personally took, and I didn't know I was going to do this, but I picked the top perfectly, and then it came down shortly after that. Very small winner, but as you can see here, we are presented with another opportunity to go long. We are confirming this double bottom, still divergent, as you can see. Same level, actually lower in terms of candles, but the RSI has continued to move higher. So this is a great opportunity to enter in on Euro Pound again long. Moving into Eurogjpy, as you can see here, we have an ending diagonal finishing on our fifth wave. 1, 2, 3, 4, and then this would be our fifth wave, this whole thing right here. So we are going to be looking for an ABC corrective type pattern since we just broke out. So maybe we'll get a retest of this support turn to resistance in this uptrending, as I said, ending diagonal, wedge, whatever you want to call it. And then we will continue to keep our bias short on this pair as well. Moving into Euro USD, I'm actually long on this because as you can see, we've got a breakout of this channel, retesting this channel now, divergent on the daily chart, and we are also on a channel on the daily chart as well. So I can actually just move these waves around. Looks like an A, B, C right here. Finishing our C wave coming up. Maybe going to get the start of our first wave once we bounce off of this lower time frame channel and head towards the higher bound of the higher time frame channel. Moving into Ncdjpy, another great divergent opportunity with a double top on the 4 hour here. As you can see, price is same level. RSI is moving down, declining. Here's going to be our chart of the week, mine at least. As you can see here, we are on a synthetics chart. I don't know if any of you guys have heard of synthetics, but it is a altcoin, which is a alternative cryptocurrency. As you can see, we broke out of this downtrending channel right here when we first finished our 5-wave move up, which was actually 5 waves of a first wave, which we might be diving into later if you guys want any more videos on how we do currency basket analysis or how we draw up our Elliott wave counts. But as you can see here on this 4 hour chart, we are heading down. We just broke out of this downtrending wedge right here, bounced off the bottom of this channel, reached our reversal zone of this wave here, reaching the 38.2 to 61.8 of this first wave right here. And we are looking to move higher, break out of this channel, and continue our upward momentum on synthetics. So moving into our currency basket strength and weakness analysis for this week, as you can see, we are seeing that it's actually quite interesting because none of this analysis lines up with a risk on market sentiment. As you can see, we see the yen appreciating, the euro, pound, Kiwi, Australian dollar, and Canadian dollar all depreciating, and I'm seeing some indecision in the dollar as well as the Swiss franc. And because I gave you guys an analysis last week on the same exact currency baskets, I also marked out which ones were divergent. Divergence, which we were just talking about a lot in this episode because there was a lot of divergence this week, it was also present last week in our currency baskets. We saw that these pairs were moving and trending very strong, but the RSI was showing us divergence. Every pair that I have here with a star, so the pound, the euro, and the yen, as well as the Australian dollar and the Canadian dollar, were divergent last week, and they've completely shifted direction after this last week. Why is that? Because the divergence proved to be true. Price then rejected off of their highs or their lows, whatever they were trending at, and then formed a reversal, which they are now moving in and have been moving in for the last couple of days. So it's very interesting to see. Every single divergence that we identified worked out, as well as our Canadian dollar, which, as I said last week, was trending very strong, and I didn't see any other signs besides that divergence of that trend stopping. But it did stop, and we got a reversal. So we'll be looking at these pairs for our currency basket analysis for this week. Okay, traders, so that was our market forecast for March 22nd. I hope that you pulled some value from it, to watch out for those fundamental drivers, and also to utilize those technical analysis setups to either execute on their own or incorporate that higher time frame analysis into your lower time frame trading execution plan. So if you are not already following us on all of our social media platforms, be sure to do so, because we're releasing new content every single day across all of our various platforms. And we're releasing this type of video for you guys every single week on Monday. So, on behalf from everyone at Funding Talent, as always, happy trading.